Oh no, I got mortgage insurance. How do I get rid of it? Watch this video and find out. Thank you so much for watching. My name is Tim Tom Koviak. I am a licensed loan advisor. On this channel, we talk about buying homes for first-time home buyers, budgeting, credit, leveling up, all types of financial topics. Now, in this video, we're going to talk about mortgage insurance. Ouch! Now, you're probably watching this video for one or two reasons. Either you have mortgage insurance and you're really upset, or you want to get rid of it, or want to know how to get rid of it, or you just bought a home and you didn't put 20% down and you're wondering about when does that mortgage insurance drop off. On this video, I'm going to tell you everything about mortgage insurance, how to get rid of it, the different types of mortgage insurance, how it works, and what it covers. So without further ado, let's get into the video. Okay, so mortgage insurance, that's what we're talking about. Now, I know what you want to know. Most people want to know how to get rid of it. But let me just provide a little bit of context, because if I just talk about how to get rid of it, this video is 2 seconds and it doesn't provide the context. I'm going to give you the knowledge. This is very important to understand the ins and outs and not just how to get rid of it. So we'll talk about the types of mortgage insurance, of course, how to get rid of it, and then the closing remarks where I'm going to really kind of bring it all together. So a lot of homeowners, what they do is that they go on Zillow and they see the home value of their property go up and up. And then they go, well, I have 20% equity. And then they look at their mortgage statement, as you see here. And over time, you see, why am I paying, this $113 mortgage insurance if I have more than 20%? Now, let me explain this. The lender goes off of when you bought the home, the value. So, and really, lenders do one or two things. They either do the purchase price or the appraised value, whatever's less. That's really what lenders go off of, whatever's less. Now, some lenders and mortgage servicers will go off of the appraised value. That means what the home appraised for when you bought it. And some will go off the purchase price. Now, you may wonder, why don't they just use the current value? Well, with homes, they go up and down based on comparable sales. So based on what homes are selling for in your market determines the value, okay? So you may see your home rising because home prices are rising in your area, which is great. You do have equity. Your home is worth that. But remember, the lender is going off of when you bought the home. And you can call up your mortgage servicer and ask them. That's what they're going to go off of. So let's talk really quick about the types of mortgage insurance. Let's talk about the types of mortgage insurance. And there are only two types of mortgage insurance. There's MIP, and this is mortgage insurance premium. Now, mortgage insurance premium, it's on FHA loans. And it's very to understand that a FHA mortgage is a government-backed loan. And what that means is that the government will reimburse the lender if you default. Now, I know you don't plan to default or don't think you're going to default, but what FHA mortgage is, it allows people with a little bit lower credit, smaller down payments, people with, not the most best income. So with the government backing, it makes homeownership a lot easier. You also get a lower rate with a FHA mortgage. Now, the only downside to a FHA mortgage is that you do have this mortgage insurance premium, okay? Remember, you probably wouldn't have got the home if it wasn't for FHA. So FHA is a very, very popular program. I love FHA. I do a lot of FHA loans. The only downside is that they have a little bit of mortgage insurance because think about it. You have a smaller down payment or a little bit lower credit, or, it could be a lot of different reasons why you do a FHA mortgage. It may just be the best loan program for you. And I recommend a lot of first-time home buyers get an FHA mortgage. It's easier to qualify. Now, the second type of mortgage insurance is called private mortgage insurance. That's over here, private mortgage insurance. And that's for a conventional mortgage. And the two main agencies that provide conventional mortgages are Freddie and Fannie Mac, okay? Now, it's very interesting to note this is that with private mortgage insurance, it's based on your credit, your down payment, what type of income. So it's really assess the overall risk factor. If you're putting 5 or 10% down and you have over 700 credit, your private mortgage insurance will be lower. With FHA, it's normally just 0.8 basic points added to your, that's what it is. It's just a flat rate. But with private mortgage insurance, it's based on the risk factors. So those are the two main types of mortgage insurance. So you want to determine what type of mortgage insurance you have before you call your lender. You want to find out if you have a conventional mortgage or do you have a FHA mortgage. Now, I can tell you right now, if you have probably under 700 credit, it's more likely you have an FHA mortgage, but you want to find that out, okay? Now, let's go a little bit deeper into mortgage insurance premium, which is FHA. And I'm just going to read this here. A FHA mortgage insurance premium is a type of mortgage insurance that is required for loans backed by the Federal Housing Administration, FHA. MIP protects the lender in case the borrower defaults on the loan. So all it does is protect the lender. I know it doesn't do anything for you, but remember, it allows you to get that mortgage that you may have not otherwise got. So with private mortgage insurance, and I'll read this here, private mortgage insurance is a type of mortgage insurance you might be required to buy if you take out a conventional loan with a down payment less than 20% of the purchase price. It protects the lender, not you, if you stop making your payments on the loan. So it works very similar. If you don't put 20% down, you will have that mortgage insurance, okay? So let's go to the next slide here. Now, this is the rules with FHA private mortgage insurance. Now, you may not like this, but this is the rules. I got to go over it now. And this chart here, let me just zoom in here so you can see it here. So most mortgages will be less than $726,000, $200, or even if it's greater, it's the same thing. Now, if you put 10% more, do you see 90%? If you put 10%, let me put a 10% here, a down payment of 10% or more. Oh, you can't really read that. Sorry. If you put a 10% down or more, you will have mortgage insurance on a FHA loan for 11 years. So no matter how much equity you have with FHA mortgages, it will stay on there for 11 years. Now, the good news, it does go down a little bit. It doesn't stay high because the FHA understands that home prices usually go up, so it gets a little bit smaller, but it stays on there for 11 years. Now, you don't have to keep it for 11 years. You could simply refinance out of it within that time. Remember, 11 years is a long time, and it'll be an opportunity to refinance. You want to refinance into a conventional mortgage. And it'll be easier to go to a conventional mortgage because you'll have equity, you already have the home, just have decent credit and have income. Now, this is also, I got to tell you, even if you put 20% down on a FHA mortgage, you're still at that 11 years with FHA. But most of the time, if you're going to put 20% down, you should definitely do a conventional mortgage. Now, here's the bad news. Most first-time home buyers and most home buyers in general do not put 10% down, not even 5% down. They do the minimum. The minimum is 3.5% down. Now, if you put 3.5% down on an FHA mortgage, which is the minimum, you will have mortgage insurance for the whole term of the mortgage, 30 years. But remember, most people do not make 360 payments. On average, most Americans refinance their mortgage every 3 to 7 years. Every 3 to 7 years, people refinance. Let me explain. I know you don't think you will refinance, but a lot of times you will refinance to lower your payment because rates go up and down. You might refinance to take money out. You might refinance for a shorter term. You might just buy a bigger home. So even if you have mortgage insurance, don't freak out. The rates will go up or down, and there'll be an opportunity for you to remove it most likely, okay? So remember, if you put less than 10% down on a FHA mortgage, which is 9 out of 10 times, it's on there for the life of the loan. It does get a little bit smaller each year as you get deeper into your mortgage. However, you can possibly refinance out of it, okay? So really quick also with private mortgage insurance, depending on your down payment, you may have private mortgage insurance for the entire length of the loan or 11 years. The only option is to refinance to FHA to a conventional mortgage. So that's the only way you can get rid of it, is to refinance into a conventional mortgage. Now, you may think that a conventional mortgage doesn't make sense. The rates are high. The rates are high now. But remember, rates go up and down. And I want to give you a little tidbit. FHA mortgages have lower interest rates. However, with that mortgage insurance, it makes your rate a little higher. Let me explain. Because remember I told you, or I'm going to tell you now, the mortgage insurance on an FHA mortgage is like 0.08. So whatever rate you have, let's say you have a 3% rate, your effective rate, we call it, would be 3.8. So if you ever see rates at 4%, it may make sense to refinance out of it, okay? It could make sense to get a higher conventional rate. Conventional mortgages do have a little bit higher rates, but they don't have mortgage insurance. And that's why it's good to talk to a lender, okay? But generally speaking, the FHA needs this money so they can provide more FHA's loans to other borrowers. That's just how it works, okay? Now, with a conventional mortgage, which is private mortgage insurance, the requirement is you have private mortgage insurance when you put less than 20% down on your home value. So even if you buy a home, conventional or FHA, and you put less than 20% down, you do have mortgage insurance. It's just a different type of mortgage insurance. It's private mortgage insurance and not premium mortgage insurance. So you still have mortgage insurance. Now, the good news with a conventional mortgage is that you can call your lender and request it when you get to 80% loan to value. So 80% of the original purchase price or the original home appraised value, you can ask for it to be removed. Or when it reaches 78%, they will automatically remove it. So automatically remove your loan to value at 78%, or you can request it at 80%. Now, sometimes I haven't seen this, but I've heard that sometimes people have called their lender and ordered a evaluation on a conventional mortgage and it was removed. I don't know how true that is, but I've heard that. Now, in conclusion, let me just read this here. The good news, even with private mortgage insurance, you probably have a lower rate and payment on your FHA mortgage. A mortgage loan is a long-term During the period, you will have the opportunity to refinance from a FHA mortgage to a conventional mortgage. During this period, work on your credit and be ready for this opportunity. So if you are in a FHA mortgage, you want to be ready if the market does dip so you can refinance into a conventional mortgage. You want to be ready when you have good credit, income, and you already have the equity because you have 20%. The private mortgage does decrease as time goes on. And if you have a conventional mortgage, you can always refinance or wait till you reach to 80% of the original appraised value. Thank you so much for watching. I hope this video helps. Now, you may have some more questions about mortgage insurance. Drop me a comment. I would love to talk to you about it. But don't panic. Mortgage insurance is very typical. I paid mortgage insurance. Most people pay mortgage insurance. Most people don't put 20% down the home. Sometimes it doesn't make sense to put all that cash in your home to save on a little bit of mortgage insurance. But let me know if you have questions. Thank you so much for watching. I'll see you again on the next video. Thanks. Buddha.